Welcome to my YouTube channel. This is Timmy Trade and I'll be your tutor for today. I'll be teaching you how to trade as an SMC trader. So first, this video is about market structure, liquidity, breakout structure, fair value gap, and change of character. So according to this video, you can see I'll be explaining the trends which I have input on the screen. So market structure is a series of price action in which market moves up and which market moves down, and also which market moves in a range. So the first one is this is an uptrend market structure in which price is going up, upward direction. This is an uptrend market direction, market structure. And the second one, which is a downtrend market direction. Then the third one, which is range, market in a range here. So these are the three types of market structure. In the uptrend market structure, market creates higher high. This is a higher high here, and this is a higher low, higher high, higher low. This is the uptrend market structure. It will always create higher highs and higher lows. While in a downtrend market structure, it creates lower high, lower low, lower high, lower low, lower high, lower low. While in a range market structure, it doesn't have a higher high or higher low. It's just in like a range. When you mean in a range, like it doesn't pass a specific price level. If you even pass it will just be slightly, then you return back into the range. So that's for the range market structure. Next one, we are going to be talking about the liquidity. Liquidity is a level in the market where money rests. Liquidity can be in a form where in another block, fair value gap, and the other zones that market have not able to tap to or reach. So that's where liquidity means money, and that's the range where markets will like to move to, where liquidity is. So the third one, we'll be talking about what we call breakout structure. As I've said, this is a market structure which is in an uptrend, and this is a downtrend market structure which is in a downtrend, and also this is a market structure which is in a range. So the breakout structure is a action in which markets break above the previous high or lows. In this, I'll be using this uptrend market structure to explain the breakout structure in this video. So this is a breakout structure because this previous high was broken by this leg, this uptrend here. So I'll mark it out to show you the BOS, the breakout structure, which is also the acronym for BOS. So I'll mark it out here. This is a breakout structure here. Then this is also a BOS. Anytime price breaks above the previous high or low, that's a BOS. You mark it out, and it must be in form of a full body close, not a wick, which I'll be talking about in my next video. So this is a breakout structure also. Then also we have a breakout structure here. So these are breakout structure in an uptrend. Once market break above a previous high, that's a breakout structure. Then this is a breakout structure in a downtrend. So always break down. This is a breakout structure. And then this is another breakout structure here. You can see how I'm marking it. That's how you are going to be marking your breakout structure. So that's the breaker structure. So in a range there will always be a breaker structure, and sometimes there won't be a breaker structure, just something like we call liquidity graph. So this is a breaker structure inside this range, but because it's a range, we don't like to mark breaker structure inside the range because we don't trade it. So what I'm talking about is a fair value gap. I'm talking about the fair value gap next. Fair value gap. Fair value gap is a gap created between three candles which are following each other, like this way. The first candle opens here. This is the first candle. Then the next candle follows, opens here. Then the next one. So the fair value gap is always between the three candles, in between them. So this is the fair value gap. If you want to mark a fair value gap now, this is not the fair value gap between this, the fair value gap here. It's always between the first and the third candle. That's where the fair value gap always lies. So this is the fair value gap here. You have it here. You call it SDG or imbalance. So that's the fair value gap example. Then we have something that we call, lastly, we have something that we call change of character. Change of character is the first BOS after a downtrend or a uptrend market. Like, let me explain using this chart now, using this mark. So as we said, this is an uptrend market, and this is an uptrend market going up. So pardon me, I don't really know how to explain things like that. So this is an uptrend market. So a change of character will be the first pullback that break below this place. So that's a change of character, and it's always signing that markets want to reverse. They want to go down, like when you want to change this market structure to downtrend market structure. So markets will now break like this. Once market break this previous low, then this break will now be what we call change of character, not BOS. Change of character, because you break below this low, and this price has been going up. So the first one that do the opposite of the BOS direction, that's a change of character. So then we now have the BOS next after the change of character, which signify that trend will continue. So this is it. So this is a change of character here, because it break below the last recent breakout structure. So this is it. This is a change of character. Let me add text. We call it CHOCH. That's our change of character there. Then this is BOS. What I said about the definition of change of character is the first pullback that broke below the high that created the low that created the low that created the BOS in an opposite direction. So it will always be in an opposite direction of the BOS when you want to note a change of character. So this is a change of character because it's in the opposite of the BOS, and the trend was actually uptrend before. It was going up. then the BOS is facing up. And once you just notice that suddenly the market BOS changed down like this, creating a BOS down here, note that there is a change of character. Then we will now have after the change of character, we will now have a BOS. Note that this is the BOS. After the change of character, we have a BOS, which signifies that market will now start going down. That means we have changed to downtrend. We have changed to downtrend once a BOS occurs after the change of character. So that's for change of character and BOS. So I will now move to chart example now to explain more better with chart and how you can mark out your analysis using this. So I'll be clearing everything that I've used, so it will just to make it cleaner. So let's go to the chart example. So this is, here we are on US Swiss France, which is USD CHF. So we are going to look at this chart and we are going to we will mark it out and know what our trend is actually. So full chart, sorry. We will go to the, this is we are on the 4-hour chart, as you can see from this zone here. You can see we are in an uptrend. Then what will you do when we are in an uptrend? You start from the low. This is the low here, to start marking out your BOS. So this is our BOS here. This was the previous high, was broken. This is the previous high, was broken. It was broken by this high, was broken by this low. Then we have another BOS here. I will just be marking out the BOS. I've talked about the market structure, which is uptrend. Say it's, we are uptrend, we are up here. This is the arrow that I used to identify my market structure. Then we'll mark out the BOS. This is the high that was created. This high was created and was broken by this low, which is our higher low. Then this got broken by this, was broken by this low here. Then this is our BOS here. That means we are going to be trading higher because we are breaking towards the upside, we are facing up. Then this is another BOS here. Then we have a BOS here already now. So after, then you mark your BOS again. I'm just marking out the BOS. How you mark your BOS? This is a high that was created and this low broke this high, so this is a BOS here. Once the low break the high, that's a BOS, and once the high break the low, that's a BOS. So this is a BOS. It must be on body close. Body close. What I mean by body close, not this tiny wick. It must be full like this, something like this, not this one that is tiny body here. No. So we'll move to the next one. Let's mark out the BOS. This low broke this level here, broke this high here. This low is the one that break this one, so you mark it out like this too. Don't forget we are the trend, the market structure is uptrend, and going like this. So that's a BOS. We are still bullish, so see how we are still bullish. on this trade. See how we have been marking out our BOS to get the structure for our analysis. Then mark out this one too, because this low broke this previous high here, creating another one here. Then we mark it out this way. So that's our BOS. I'm just marking out the BOS for us, so you can see how I'm marking out this BOS. So you can also do that on your charts. Get back to me how this works for you. So we move to the fair value gap. Although I use a indicator which is FEG, IFEG, nephew Sam. So if you want to use it, so use it in this description, so you can use it in this video. So I'll just turn it on to find my fair value gap instead of just marking it out inside the whole chart. It's going to make it rough. So I'll just turn it on. So this is the FEG. It just automatically shows me where my FEG is. So FEG always make your it always tell you where their volumes of money are into, like where you should be expecting price can react from, all these things. So that's what FEG does, and it helps to make your charts to your analysis to be right. Like it helps you out in your analysis. Since there's FEG here, it shows that volume of money is there, so you can continue trading. Some people enter trade from FEG, but me, I use other block, which I'll also be discussing in the next video also. I'm talking about other blocks and the likes. So that's all for fair value gap, breakout structure, market structure, change of character. Let me find an example of change of character here. See, we are in an uptrend there, so I'll try and find a typical example of change of character. Yeah, so I've seen one here. So from here we can see this is an uptrend. Yeah, we are going up. So let me mark out the breakout structure. The breakout structure, this is it. We broke this place out. This is a breakout structure. No, that's a change of character, because we're in a range and it seems like we're coming down. We came down. Yeah, that's a change of character, not a breakout structure. This is a change of character. Because we are coming down. I will show you. So this is a change of character here. So the change of character shows that we are coming from this down move here. See how we are coming down. So it's down. The price we are coming down. This is BOS here. Can you see this high broke this low here? That's why I'm marking this as a breakout structure. And this also is a breakout structure, because this is also a breakout structure because we broke this low here. So this is a breakout structure here. Now what now happened? Price came back, took out the high, the strong lower high. It took it out, telling us the market is ready to go in a bullish trend. Then after the change of character, we are expecting to see BOS. Then we have our BOS here. These are BOS here now, occurring here. You can just mark out your charts anywhere to follow up and let me know how it works for you. So these are BOS here. I'll type it also. BOS. So that's our BOS. Then we have another BOS again. So I'm just trying to show you the change of character, and I've showed you why I marked this as my change of character, because we're downtrend there. Then this recent break broke above the direction of the breakout structure. BOS means breakout structure, don't forget. So now that we are in an uptrend here, now I've showed you that we're in an uptrend here. Then again it occurred, the change of character occurred again, because after we mark this as our last breakout structure, we mark this as our last breakout structure. That's our last breakout structure. Then we don't expect price to come below it. Once price come below the last breakout structure, which is this now, then we can say that there is a change of character. So it has changed character to a downtrend. Then we mark this as our change of character. Change of character. So that's our change of character. Then we have you see the price did not break below. That's just a liquidity grab. So that's it, and price continue on this initial uptrend there, then we continue moving up. See I'm marking it. So that's how you mark your charts, you mark your analysis with SMC method. So use this video and get back to me in the comment section and let me know how you are proceeding with it. Thank you for watching my video. See you in the next video. Bye.